Good morning, good morning, good morning, everybody. Super excited to be here with you on this fantastic Sunday morning, as we always are. As you know, I am the Lumberjack Landlord, and we are here to talk about real estate. Let's see, am I experiencing technical difficulties? I may or may not be, but let's just see if we are having an issue here. If you are in the comments and you can see the live stream, please let me know if we are currently having an issue. I'm getting a message that we're having an issue, but not sure. Getting nervous about where to park my money. Yeah, with too much detail. Can you say where you have your dry powder, bank account, mutual funds, money market? Good morning. Good morning, guys. Are you guys able to see the live stream okay? I hope you are. Maybe you're just hearing it, but if you can, give me a quick okay, you see me? We're good. Fantastic. Apparently it's just a playback issue actually within the wonderfulness that is YouTube. So that's no problem. We can do this without that. Just give me, you can see me. Okay, perfect. Then we're doing all right. So yeah, it's going to be a fantastic day today. We're going to talk about all the fun that's going on with SVB Bank or SVB. And yeah, to be expected, totally expected it, knew it was going to happen. Part of my call for the availability of credit disappearing, as it always does in recessions, and a banking collapse is how it starts. So as you can tell, I'm not sweating over here. I'm actually quite relaxed in my sweatshirt. And won't show you whether or not I'm wearing pants because Dion told me that I shouldn't do that. So that being said, this is basically what you have to look forward to. We did this in 07, 08, but it was a much bigger mess. Some people talking about, oh my gosh, the collapse of SVB is going to be a problem. It's going to be a problem for some people. Sure. Yep. That's also why we have FDIC. That's also, there's going to be some companies that go out of business because of this. But is it going to blow up the entire economy? Likely not. Again, to guys put this in retrospect, right? So they had about 8,000 employees. That's a good sized company, 8,000 employees. They had about $43 billion. They had about $43 billion at under management and in the bank. So they had about 43 billion bucks. 43 billion bucks is, you know, it's good size. But let's not get twisted about how big this is. Countrywide, much larger when they failed and had to be bought for pennies on the dollar. Merrill Lynch, much larger when they failed, had to be bought for pennies on the dollar. Lehman, that went out of business, $639 billion was how big they were when they failed. So I think that we need to just put this in a little bit of perspective. Now, I think that, and I know that SVB has branches all over the country. I know that. But let's look at what the core competencies or incompetencies of that bank were. Really, the core of that bank, it was a lender. It was a lender to startups. It was a place where venture cap funds, i.e., somebody opens up a fund and they have $300 million in their fund to go out and buy companies. They would house that money often in a company like SVB, because SVB did a good transition from the venture guys who actually created the fund and have the money sitting there, to then them making the investment in a smaller firm that they're buying or just making a large capital investment in. And then it opens up the door for banking for that smaller startup, or the one that they're acquiring or the one that they're investing in. And then they would bring their books essentially to that bank and their banking needs. So then payroll starts getting paid from there and those sorts of things. And it gives them a level of controls. And so to be very clear, that's where that kind of incestual relationship starts from that perspective. But again, this does not equal collapse for the entire market. This is a bank where there will absolutely be companies that are hurt. There will absolutely be companies that have some loss of capital or flat out go out of business because they, for some reason, can't get a line of credit with somebody else. But usually it's the super weak companies. So it's companies like Open Door are going to get obliterated. Like if they have a lot of money sitting behind in that count, that's going to be a problem. So hold on one second. As always, we have people out there. Let's see. A no heat call, appropriate for a Sunday. But again, this is not something that I think is something we have to be really overly concerned about. If it continues to happen to more and more banks, obviously, then that's the reason for concern. But this is one of those things that becomes a self-fulfilling prophecy where you have to look at, does everybody show up Monday morning and start pulling money out of their accounts? Well, that would be kind of stupid, because most banks don't have anywhere near that amount of money that they have your money available to. They've lended out usually 10x that. So if that serves, largely speaking, a lot of organizations, when you see a run on the bank, if it's, 7, 8, 9, 10%, well, now the bank effectively doesn't really have any cash and they have put out a bunch of money out onto the street. And I will not make any sort of a loan shark reference here. That being said, yeah, tomorrow's going to be interesting. But largely speaking, this is a big nothing burger and a reason for people to go out there and try and get views. Because if I had a deal under contract now, I'd still be closing. Now, other deals will fall apart because maybe their funds were at SVB. Maybe it's one of the other, the biggest mistake that was made was Janet Yellen said banks. That one letter is going to cost her. That's going to cost her. She said banks. She should have said bank. Even if she knows it's banks, she should have said bank, because no one else was focused on other banks. However, it doesn't take a rocket scientist to know the people that were on the short side of this, who, are going to make an absolute killing. There's other banks out there that had a profile somewhat like this, not as big. And so it will impact those folks, will impact those banks, and it will impact their customers. There's nothing fun about this. Don't get me wrong. And I'm not taking a victory lap by any means. I just knew this was coming because this is how it works. This is how it happens. And, one of the biggest things that a lot of people not in tech don't understand is the concept of stock options when you're actually working for a startup. A lot of times these startups, they'll give you stock, but it's non-liquid stock. So you get given 50,000 shares and your price was $1 a share, or you get gifted it because you're an executive. And so you get 50,000 shares, let's say. The issue is that's an illiquid asset in the market, because the market, it's not a public company. It can't be traded. So banks like SVB would say, based on the current valuation on the books, based on, all of this other information, I won't get into it because we're not a financial channel, but based on all this other information, well, can't happen instantaneously, people. So because of this is something that's going to be a bump in the road. There will be other banks that will fail, but these guys were unique. These guys were a specific bank with lots of assets, but a majority of their work was done with venture capital, with small startups. And so it's not to say that not anyone else is going to be affected, but that's the majority of the people that are going to be affected. And that's also going to lend itself to Silicon Valley. And there's going to be some major hiccups and burps out there. Because you need access to capital. It's burn. It's what's called burn rate. And, if your company is making $100,000 a week, but your employees cost you $200,000 a week, well, then you're digging into $100,000 a week that you're writing checks to cover your expenses. And when your bank is frozen, you cannot do that. And you're not bringing in enough revenue even to switch it over to another bank. However, there are plenty of banks out there that had multiple bank holdings, so they don't only have all their money in one bank, as an example. So, like I said, it is what it is. It's the banking market. This bank will collapse. Who knows what it ends up looking like? And, basically the feds are in there running it now. And, we'll see it unfold in the next few weeks. But let's also recognize the size of the bank. While it is a significant institution, it's 8,500 employees. It's 8,500 employees. So while it's challenging and horrible for them, I'm not saying it's not horrible for them. It is. But while it's horrible for them, for everyone else, we're just watching to see kind of what happens and how it unfolds. Anyway, that's my opinion on the banking collapse, but that is how it leads to corrections. And so, yeah,